QuickBooks Pro Desktop 2021. Enter payroll for second month. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are in our Get Great Guitars homepage practice file. We currently have the Open Windows open. You can open the Open Windows by going to the View dropdown, selecting the Open Windows list. We're now going to be entering payroll. This will be the second period of payroll we will be entering. We'll do it a little bit faster due to that. So if you want more detail, take a look at the prior month for more detailed explanation. So we're down here in the employees section. Remember that if you are in the employees section, you want to make sure it's turned on to process the payroll. To see that it's turned on, it'll usually have this little arrow that goes through it, and that'll mean that it will be turned on. Also note that you do have different options with regards to payroll, and I highly recommend talking to someone that you're not actually thinking of paying for payroll to give you advice on it. For example, if you're thinking about buying payroll, the add-on through QuickBooks, or if you're thinking about working with a third-party payroll for support, like with an ADP or a Paychecks to help you out with your payroll process, a third party, then you might want to talk to a CPA or an accountant who is independent from that, who can give you an opinion on what the best course of action would be, and then talk to those people who are a bit biased in their opinion, of course, because they want to pick up the work. So that's what I would suggest doing. So you have options to add on the payroll within QuickBooks. That's one of your options. Or you can work with a third party like an ADP or a Paychecks, and that's one of your options here. Now, in our practice problem, we're going to use the manual payroll. We've been using the manual payroll, which is great for practice because we actually have to then enter the amount of withholdings. However, in practice, you don't want to do that. You want it to appear magically, automatically, because it's easy to mess up basically the calculation of the withholdings for multiple different employees. So to turn on the manual payroll, which I recommend for a practice problem, but do not recommend for practice, for actual work, I do recommend that even with small amount of payroll, you probably want some type of support, whether that be through QuickBooks or a third party. So remember, to turn this on, we went to the Edit dropdown, Preferences, and we are in the Payroll section, so the Payroll and My Preferences, and we turned on this Manual Payroll. So now we have the Manual Payroll on, and so we have the payroll setting with this little arrow down at the bottom. If you select that manual payroll, QuickBooks will ask you to purchase their added payroll, which again, I would use something in practice, but this is a really good practice tool to have. If you have something other than QuickBooks 2021, you might be able to turn on the manual payroll using the Help menu and then typing in manual payroll. Sometimes that will help you to set it up in prior versions of the software. So now let's think about entering this payroll into basically just like a register to think about what the calculations would be in Excel, just to get an idea of what the journal entry would be, what's actually happening from an employee by employee situation, and then enter that payroll into the system to see what's going to be recorded. So we have two employees. We're going to say and this is what we did last time. So we're going to basically copy this out. We're going to be paying monthly. So this first employee, we're going to say that we pay them, we're going to say $55,000 a year divided by 12 months. We're going to pay that $4,583.33. Social Security is usually calculated as that number times 0.062, 6.2%. And I'm not going to get into a lot of detail on the payroll rules and whatnot, but just it's more of a flat tax. Just know that Social Security is more of a flat tax generally, and therefore it's easier for us to calculate than something like federal income tax. The Medicare is going to be something like the wages times 0.0145. Again, more of a flat tax with some exceptions to the rule, a little bit more complicated, but for the most part. And then the income tax is the federal income tax that on the employee's wages. This is the confusing one. This is the one where it's worth it to buy payroll software to kind of figure most of the time. This is going to be calculated on using the W-4 information, including things like marital status and whatnot. For it. It's a progressive tax system, therefore it's not an easy tax to calculate. We're not going to look it up and check it out in order to pull it from the tables. We do have a payroll course if you want to look into that in more detail. We're just going to say that it's $720 for our purposes here. Therefore, the net check is going to be equal to the total earnings minus the Social Security, minus the Medicare, minus the income tax. So this is the net check. Now, this is again simplified because there's no state taxes, which there may be state taxes depending on the state, and we're not talking about anything like a 401k plan or any other kind of deductions that are coming from it. Again, if you want more detail, take a look at our payroll course on it, or we might have more detail on payroll after the practice problem. But the general idea then is then the employer has to actually match Social Security and Medicare for each employee as well, pay taxes over and above what we are paying to the employee. So that's that. And then Erica, we're going to say that was, we're going to do the same thing here. We're going to say she has 20 times 40 hours, $800. Social Security is going to be that 800 times 0.062. The Medicare is going to be that 800 times 0.0145. And then I'm just going to put in a number for the income tax, which is going to say it's 110. Then the net check is going to be equal to the 800 minus the Social Security, minus Medicare, minus income tax. Social Security and Medicare on the employer side will be the same as well. So notice then we can add these up. So you can think about this from a paycheck by paycheck standpoint. When you enter it into the system, you can think of it as one lump sum kind of thing, as if you had one employee, right? And let's try to think about it in that format. If I was to add these up, for example, summing this up, we could say, okay, this is kind of like we had one employee, and thinking about it as if we had one employee, this is our payroll, and do it on a complete kind of framework. So I'm going to say the Social Security on the total wages is going to be this times 0.062. Now, again, this you got to be careful with this with regards to caps and whatnot on Social Security. So again, there's exceptions to this, but this is the general idea, right? We can think about it at the 53883 times the 0.0145. Notice that those two work well because it's a flat tax, right? I can add those two up this way and they work fine. I cannot do that with the income tax because it's a progressive tax, and all I can do is sum up these taxes here. So that's the total. The net pay then is going to be equal to this minus the Social Security, minus the Medicare, minus the income tax. So there we have that, which is also equal to the sum of these two. And then the Social Security and Medicare, we could say this is going to be matched, which is I can do this way and pick those up, or I can add them up this way. So there we have that. So now, if you had a third party that was helping you, like an ADP or a Paychecks doing it outside of QuickBooks, not using QuickBooks to record it, they might then help you and provide you with this information. And then you would take this information and enter it into your system so that you have the financial data in your system, and you might use more of a summary technique rather than entering all the detail for each individual employee, having that more detail with the payroll company if and when you need to access it for any kind of problems that take place. So just, those are the two items. So if I was to enter this in terms of a journal entry, you could do it employee by employee to think about the accounts that were affected, or total. So if I did it employee by employee, I would say, okay, the expenses would go up. This would be an expense. I'm going to do debits and credits, but you can think about it as increase and decrease as well. Expenses would go up. We know that the net check would be decreasing cash with a credit of the net check. The difference between the two is the payroll liabilities that are going to be going up that we took from the employee, which are going to be these three. So these two add up to that. Erica, same thing. We would say Erica had 800, but she's only going to get the 628.80. The difference is going to be the payroll taxes, which are these three. And there we have that. So these two add up to the 800. The total, we can think about it in total. Our actual total expenses are going to be the total expenses there. The net check or net checks that will be removed for that payroll is that. The difference is the negative sum of the payroll expenses. So then if we add these up, that's going to be the 5383 once again, which is the 5383. Then we have the employer taxes, which I can think of as just a total here. I'm just going to do the total payroll, employer taxes, Social Security and Medicare that the employer pays over and above the employee's payroll. They're charged taxes, not on their income, but the employee's income. And so there we have that. That's going to increase the payroll expenses or payroll tax expense, and then liabilities. So let's do that by entering this information now into QuickBooks using using the payroll data input system. So I'm going to we're going to enter payroll. So we're on the second tab here, entering the payroll. And this is going to be the manual payroll. It'll look the same basically for, pretty much the same for the paid payroll. 2 dates here. One is going to be the end of the month. That's going to be our pay period end. And then we got the pay date. Now I'm going to make them the same date. So this is when the month ended, so that we're paying for that month ended. And this is when the check is going out. This may not always be the case. You might have the check going out after the end of the period, which would be somewhat common. But I want to keep it in the same date, so it's in the same month here. So that's going to be going to the checking account. Also note, remember, you might want another account for payroll so that you can track all your transactions that are payroll related in one account. And all you're going to do with that account is put money into the payroll account just to cover the payroll, and then pay it out of that account, and so that you can have all your payroll transactions in one account. Because payroll is going to be the kind of checks where you're most likely to have problems on. So it could be nice to have all your payroll activity in a separate checking account. Some companies will do that. Then we're going to be printing it. We're going to have the numbers down here. We're not going to print the checks. We're going to have the handwritten checks, which will start here. If you have electronic checks, same kind of thing. You can use something other than a number to refer to the fact that they're not going to be actual check numbers there, but some other form of payment. I'm going to check these 2 off, and then I'm going to go into the detail. So I'm going to go into Adam's detail here. Now note, if we had the paid payroll and we had a salaried employee once set up, we wouldn't have to do much of anything at that point because it would be the same each month. But down here in the manual payroll, we have to enter the actual data into the manual payroll. So this is how much he's going to get paid. Now we're going to take out the amount that we're going to withhold. Now we're only thinking about the federal taxes here that we are withholding. So I'm going to say, all right, Adam had that. We're going to take out Social Security, $284.17. So I'm going to say, all right, Social Security, it's going to be here, $284.17. And then it's going to make it a negative. And then I'm going to, okay, all right, Medicare for Adam is going to be the $66.46. So we got Medicare taking out $6. Notice we put the Medicare up top and the Medicare employee additional tax. It should be down here in the Medicare employee. So I'm going to adjust that. We will adjust that in the future. You might just want to put it down here for now, or you can adjust it in the future with us. 6.46 for Medicare. And then, hold on a second. I hit enter. I'm going to close this back out. I'm going to click on Adam again because I hit enter. And then the federal income tax is going to be $720. So 720. So 720. All right. So there we have that. So now that's what's going to be withheld to the net check, 351270. Is that what we have here? So the 351271, it's off by dollars rounding. That's fine. So I'm going to say, all right. So that's the net check. So that means that when we record this, this is the journal entry that's going to happen. We're going to have a debit to the payroll expenses, credit to payroll liabilities, or increase in payroll liabilities, and the check's going to go out for that amount. So then we have the employer side. Also, what's going to happen is the employer owes taxes. It's going to match the Social Security of the 66.46 and the Medicare. Actually, that was the Medicare. Social Security is 284.17. Medicare 66.46. So we haven't yet paid these. The cash isn't going out for these, but it's going to be increased in the liability. This side, in other words, is going to be this journal entry. Increasing payroll expenses, which you could break out the payroll tax expenses if you so choose. And then the payroll liabilities are going to increase. We're going to owe that in the future. So we're not going to be dealing with California taxes here, and we're not dealing with federal unemployment tax, which is just an employer tax. For more detail on that, take a look at the payroll course if you want more detail regarding those. So I'm going to say save and next. Do the same thing for Erica. So Erica's got the 800 up here in the hours. Let's go through the withholdings now. We have the Social Security 4960 for Erica. So we're going to say, all right, Social Security 49.60. And then we have the Medicare 1160. So 11.60 on the Medicare. Federal income tax 110. federal income tax. We're going to say, all right, federal 110. So that means that these are what are taken out. We're left with the 628.80. So we're at the 628.80. That looks good. This first half will record this journal entry. Payroll expense going up, liabilities going up. Going up, checking account going down. So then the total of the net of the two will be this, is basically what's happening in total. And then the other side that we're going to be doing is to match the Social Security, which is going to be the 49.6, and the Medicare, and the Medicare, which is 11.6. So 49.6 and the 11.6. So that looks good, and that's going to be part of this journal entry. Increasing the payroll expenses, which could be payroll taxes, and increasing the liabilities. These two are combining them together, both employees. So there we have that. Let's go ahead and say save and close. Let's go back into Adam here. I think I had one thing. This is the additional Medicare. I'm actually going to delete that and put it down here into the 66.46, just the normal Medicare, not the additional Medicare up top. So that looks good. And then if I go next, so that looks good. So now I'm going to say save and close. So there we have it. So we have that information in place now. It's going to be coming out of the checking account. We have the number set up. We're going to be handwriting the check. So that looks good. I'm going to say continue. So let's go ahead and say continue and create the paychecks. So we create the paychecks. Now note that when you create the paychecks, even if you're not giving the actual physical paycheck, you do need the stubs to have them, right? You need to show the stubs. So if I preview the stubs, I'm going to say, let's check out the pay stub. So it looks something like this, probably fairly familiar. You have to give this to somebody. And now even if you have a third party that's processing the payroll, like an ADP or a Paychecks, then they might be providing this more detail, right? That could be one of the things that they can do. If you are doing it within QuickBooks, even if you have like the direct deposit set up, you need to provide them with this detail because the IRS wants them to know that they actually earned the $4,583.33, and then what was taken out of the check, because we're forced to do so to pay their taxes, was the federal income tax, Social Security, and Medicare. That's why they only got the in this case $3,512.70. And then we need that on a year-to-date basis as well. So now 2 checks have taken place, which would add up to the $9,166.66. And then the total that was taken out for federal income tax, Social Security, and Medicare are these amounts that leaves with the total that has been actually given to the employee year-to-date of the $7,025.40. So this information is necessary, and you can see how again, this isn't that complicated. No payroll item is complicated in and of itself. But when you accumulate all the things that you have to basically track and provide, now you're talking about each line item for each employee, both in terms of the current check and the year-to-date amounts, it starts to get quite detailed. So you might be looking at payroll saying, that's not that complex, I'll just do, but it starts to add up quite quickly, even with only a few employees, due to all the detail that you basically need to be providing and tracking for each employee. So just be aware of that. So I'm going to close this back out. I'm going to close this back out and say, all right, that looks good. I like to check the check register once done there. So I can go to the banking and use register here, or I can go to the lists drop down and the chart of accounts. And then I'll double click on the checking account and see there's our 2 checks. Now they have Paycheck down at the bottom of them. If you want to take a look at any of them, you can double click on the Paycheck item. And there we have it. If you want the more detail, you can go into the detail here. Now, if you need to adjust the paycheck, it's unadvisable typically to actually adjust the paycheck in here, right? What you need to do is void the paycheck and process the paycheck, the payroll for that check at least again. That would be the normal fix, that if there's a problem, that's pretty much what you got to do. So I'm going to close this back out, and notice it's just a check, but it's got this other reference down here indicating that it is indeed a paycheck. So let's take a look at our forms now. We're going to go to the reports up top, company and financial, take a look at the balance sheet. So on the balance sheet, we'll customize it and change the dates from 01/01/21 to 12/31/21, and then OK. Checking account, double clicking the checking account, we can see the checking account is going down by these 2 paychecks, but they're going down by the net check, of course. If I double click on it, they're going down by the net check, not the total earnings. The other side, closing this back out, will be on the income statement, hitting the drop down, company and financial, profit and loss, changing the dates from 01/01/21 to 12/31/21, income statement, payroll expense, double clicking the payroll expense. We have this detail. Now, this can be a little burdensome to look at because we have all this breakout. They're trying to break out individually the line items down here. We're looking at the second check. So there's only one a month. So we're looking in month 2 and only 2 employees. So all of this is one payroll check here that they're tying together. What's included in it? Well, you've got the $4,583, which was the actual gross pay. So there's the gross pay that's being shown up there. And the difference between that $4,583.33 and the net pay is going to be on the balance sheet again. Going back to the balance sheet, if we go to the balance sheet and we think about the payroll liability right here, payroll liability, double clicking on that item. Now this looks kind of a long report as well because there's a lot of detail broken out, but we're basically in February. And look what happened in January. We had the information in January for the liabilities building up, and then we wrote the checks. These are the payroll check liabilities, bringing it back to 0 at that point. Now we have the check that went out for payroll check in February. So here we have for Atom, we have the 720. That's going to be for the federal income tax. One of these is for the Social Security for the employee side, and this is going to be for the Medicare on the employee side. So that's going to be basically, this transaction that's taking place, the Social Security and Medicare that are going to be part of the liability. Then we have, and so that's basically this whole journal entry we talked about on Adam's side, and the same thing on Erica, or you can see it basically in total. And then we have this journal entry, which is basically this side, the Social Security and Medicare for the employer. These are the things that could be breaking out, and these are what are thought of as from the employer side, from the company side, as actual payroll tax expense. So when you see payroll tax expense, these items are in one sense payroll tax expenses, but they're not really expenses of the company. They're payroll tax expenses that are part of what would be included in payroll expense. They're part of the wages of the employee that are included in payroll expense of this number that we had to take from them and pay for them. So these are not going to be recorded on the company books as payroll taxes. These may be recorded and broken out separately as payroll taxes because these are payroll taxes that we, the company, pays over and above the earnings of the employee. We're paying taxes based on the employee's earnings. So these items are going to be recorded here. That's why you have this double matching. So we owe the government, what we took from the employee out of their paycheck, and we owe them what we owe over and above that, our portion of the payroll taxes, Social Security and Medicare. That's why they're doubled up here. And that's going to be the same for Erica down below. And then the other side of that is going to be on the profit and loss. So profit and loss. Now remember, we put it into payroll expenses, but some company might break it out to payroll taxes. The part that would be broken out to payroll taxes is only the employer portion of the payroll taxes. So if I double click on this, in other words, this amount right here, the check to Adam, that's the gross check. That expense includes both what we paid Adam as well as the taxes that we took from Adam and are holding on to, the money that we didn't pay to Adam, but we are going to pay on Adam's behalf to the government. So that includes both this wages, the gross earnings includes both what we gave Adam, the payroll check that was net, plus the amount of Adam's payroll taxes that we're going to pay for Adam. And then these two amounts are the Social Security and Medicare, which are actually payroll taxes to us. This would be what we could break out if we so choose into another account called payroll tax expense, because these are taxes that we have to pay over and above the earnings of the employee. We have to pay taxes above the earnings based on the employee earnings. Same of course for Erica, and I'm in January right now. The same would be down here for February, same kind of scenario that we have for February. And then for Erica, Same kind of situation for Erica. All right. So here's where we stand now. If we take a look at the balance sheet, if you're following along with us, you can check your numbers on the balance sheet here. That's what we stand. That's where we stand at this point. The profit and loss, you can check your numbers here on the P&L, the profit and loss. If you want to check your numbers to the trial balance, which I think is the easiest thing to check your numbers to, you're going to go to the reports drop down, accounting and taxes, and trial balance, changing the dates up top from 01/01/21 to 12/31/21, January through December. And here is where we stand with regards to the trial balance.